Hi, welcome to the Funding Blueprint Unlocking Startup Success presented by StartHub. I'm Cody Goff, and today you're going to learn about innovation in education technology. What does the EdTech landscape look like, and what are the critical factors that EdTech entrepreneurs should consider when developing and pitching their ideas to investors? You'll also learn how EdTech is different than other startup verticals from both the founder and investor sides of things. Now, you've heard me interview EdTech investors before, but today's conversation will help you understand the EdTech industry as a whole to give you a better idea of the opportunities and limitations of the space. My guest today is Troy Williams, an engaged leader and investor with over 20 years of investing and operating experience. He's a managing director at Achieve Partners and was formerly an MD at University Ventures. Troy leads both firms' investments in education technology companies, including BowClips, AdmitHub, EverTrue, Examity, Modomatic, Packback, and Ready Education. In addition to his investing experience, Troy has been a senior executive at Macmillan, where he was CEO of Macmillan Enterprise Solutions and president of Macmillan New Ventures. And prior to that, Troy founded and served as CEO of Questia Media, an early ebook company. To start off, I asked Troy, what's one of your favorite companies you've worked with and what made them so great? Here's our conversation.
Well, I would say one of my favorite ones is a company we're still invested in right now called Packback. Packback is a piece of software that enables students to have an AI tutor, effectively helping them think through how to ask questions and answer questions. And it really just increases the engagement that students have with a course, and shows that typically students do far better in a course. The professors say that the students who use this software end up having far better kind of live discussions and do better. So it's a company that started using AI to moderate discussion forums now 6 years ago, far before ChatGPT got on people's radar screens kind of last fall, and has iterated that for years. And what I love about it is there's a team of 4 founders who started this company back in, I would say probably 2010, 2011. It started it as a textbook kind of rental ebook company. And pivoted into this space in 2015. The founders have stayed engaged and worked hard, and it's just a tremendous story of stick-to-itiveness, at the same time having impact. And it's a team that is still together to this day, and good, hardworking Midwestern values, just a great team, and so it exhibits so many different things that I enjoy about working with entrepreneurs, and the realities of being an entrepreneur in the EdTech space, that sometimes the road is very long, from your original idea to a great outcome for everybody.
I love to hear the Midwestern kind of work ethic. Northern Illinois, born and raised and live. So that speaks to me.
Yeah, this team formed, I think, at Southern Illinois, but it may have been another school. So yeah, not far from where you're from, I take it.
Yeah, very nice. I'm just in the Chicago suburbs. Still tell people I'm from Chicago because it's easier.
Packback is a Chicago company, so good. You're in good stead there.
Perfect. I'll swing by their office sometime. As soon as you described what they do, I immediately thought, I totally see the impact. My wife is actually a college professor and tells me many stories of how engagement makes that difference, right? Like huge difference. But as an investor, I mean, education, correct me if I'm wrong, but is education particularly tricky? Because if you're talking public school, right, funding is limited some places. And even at the higher education, institutions, sometimes it's hard to get them to adopt. So how are they making money, or what do you look for in how an EdTech should be making money?
Yeah. So there's a couple of things about EdTech that make it a safe place to invest, but it makes it a challenging place to invest as a venture capitalist. And one of those things is if you're talking about that part of EdTech that's well, what I would say B2B, selling to schools or universities as opposed to individuals, there's not many kind of unicorn multi-billion-dollar outcomes. And so, most venture capitalists, that's what they're going for. They're trying to invest early on and have a pathway in a relatively short number of years to this massive outcome, almost like a lottery ticket. That just doesn't happen in the B2B ed tech space. It's a much longer road. One of the great things about it, though, is that there's more and more money every year in education. Education and healthcare, in terms of GDP, grow every year in terms of spending. And that has been happening since the 1930s. And that's because they're the two things we care about most in life. I mean, any American will tell you they care a ton about education, they care a ton about healthcare. And so they're eating a bigger and bigger piece of GDP. That said, the process of selling into schools or universities is very slow. And so it doesn't matter if you invest a lot of money and build a very large sales team with a great product. You're not necessarily going to grow super fast the way most venture capitalists want to see you grow. It just takes time. On the flip side, once you sell a school or a university, you tend to have them for 10 or more years as a customer. And so while sales cycles are long on the front end, you have a very, very long customer relationship and steady income. And the result of that is EdTech tends to lend itself more to later stage investors rather than early stage investors. And it requires a lot more bootstrapping and figuring out how to make do with relatively smaller angel rounds and seed rounds. You don't see a lot of $10 million Series A's in EdTech the way you would in a lot of other sectors of tech.
Okay. If I may make an analogy, please correct me if I'm wrong, but it sounds to me like if you're investing in the stock market, you could bet with, invest in an ETF or some index fund, right? That's just going to give you kind of a reasonably steady return. Or you can do the big bets, right? You buy a penny stock and hope it'll blow up, or you invest in a particular company and hope it'll 10x or whatever, like an Apple or something. So maybe from the VC side, it's more like for some ed tech startups, it's more like taking that just index fund kind of investment where for a while it's going to have a steady return, and it actually will be pretty good in terms of the customers, but it may not skyrocket, at least not right away. Maybe that's more of a long-term thing.
Yeah, the reality is if you think about the size of the ed tech market, while it's a $1.6 trillion market, it's incredibly diffuse. There's tens of thousands of ed tech companies. And so every individual company, most of them don't grow to be multi-billion-dollar companies. I mean, there's very few. I think right now there's 11 publicly traded firms in the education space. So most of the companies are really small. By small, I mean sub 30 million in revenue. And if you're comparing that to software companies in every other sector, those are considered extremely small companies. The reality is growing to 30 million in revenue in education is no easy feat. And anybody who's grown that big doesn't necessarily feel like they're small still. It's an accomplishment to have gotten there. But that is where most of the, thousands upon thousands of relatively small spot solutions, rather than, the Facebooks and Googles and other kind of, companies worth tens of billions of dollars. You don't see that in the education space.
Sure. I love the way the Achieve Partners website is set up. I told you this before we started recording. It really lays out some very specific tactics that will help us improve education. And I want to go back to what you said about how our spend in investing, that market for education and EdTech has increased since the 30s, essentially. And yet, on the website, you have a statistic. I'll quote this. It says 96% of provosts think their university is preparing graduates for the world of work, and 14% of hiring managers believe colleges are preparing graduates for employment. That is quite the gap. I would love you to unpack that. Are we just investing in the wrong direction? Investing in the wrong things? What's causing this, and how do we right the course?
Well, I would say classically universities view themselves as preparing you for your fifth job. And the hiring manager is more likely talking about whether or not you're ready for your first or your second job. And so a lot of the traditional liberal arts education or many other degrees are about giving you the skills to think and be a manager kind of midway through your career, give you the foundation, the underlying critical thinking skills to be a successful person over the course of your career. And so that's what provosts are talking about. The disconnect is that most students come out of college unready for the vast majority of entry-level jobs in our economy. And when you look at most of those jobs today, the areas where you have a massive amount of growth are in areas like enterprise software. So supporting Salesforce or supporting something like Workday or HubSpot. Knowing these software systems. Well, no one's learning those software systems at a four-year institution. But if you'll see kind of what are called entry-level jobs at many companies, they'll say, must have 2 years experience with Salesforce or must know a certain amount or have a certification in Salesforce. And you just don't have that coming out of college, right? And so there's this disconnect between what's required for what's considered an entry-level job and what college teaches you. And so my partner coined a phrase, last mile training, that we have this need for this last bit of training above the college degree to get you ready for that first job. What's happened over the last few decades is most employers don't want to do on-the-job training, because if they spend all that money training, the risk is that a competitor just recruits that newly trained employee out of there. And so we have this disconnect between our educational system and that 1 or 2 years worth of experience that you're just not going to get in a traditional college. And that is the source of much of the skills gap in our economy today, with over 10 million open jobs and millions of unemployed people at the same time. The disconnect is most of those jobs require some skill that most of the unemployed folks don't have. And there's no efficient way in our system, in our model of education, where you pay for education beyond secondary school to get those folks that last mile of training.
It's really interesting to me because I studied radio and TV production, and I learned Adobe Audition, ironically, not through my school. They didn't actually pay for it or train me on it. I just had a license. And my first full-time radio job, swear to God, I sat down, the hiring manager said, I mentioned, he says, you use Adobe Audition? I go, yeah, I've been using it for years. He goes, that's why you're in here. He specifically said that. And looking back, that's like, it's kind of a trade, right? But if I'm, now Adobe has student licenses, right? Like they license things to schools, they make it easier for students. So if I'm HubSpot or if I'm some other big company I know is being used a lot, wouldn't it make sense for me to just go to universities and say, hey, here's a bunch of free licenses, get everybody trained on it. And then when the business world is looking for new employees, they've already got a crop. Are you seeing existing corporations start to lead the charge there, or startups that are trying to help them lead that charge?
Yeah, there's a movement toward more of an apprenticeship model in our economy. The White House has been talking about it. Various other groups. I think there's There's support for apprenticeships on both sides of the aisle, one of the few things where you have support on both sides of the aisle. So there is a movement toward thinking about this. I would say, many of those big enterprise software companies are not doing that work themselves, of going out to the university and setting up some system. It's some other enabler in the ecosystem. Oftentimes, there are service providers who are the integrators of that type of software, who then are partnering with local community colleges or universities. But there is some pushback from universities around the concept that they become a vocational school, that is the vocationalization of the university by bringing some of those types of things on campus, if credit is tied to them, right? Most folks are okay if it's some volunteer, program that students would go through, but the concept that they're going to get actual credit toward a degree, there's resistance at traditional universities on that. And the reality is most students aren't going to be a self-starter like it sounds like you were to learn Adobe Audition. You set yourself apart. If you had just finished your degree requirements and then sent that resume out, it sounds like you wouldn't have gotten that job, that callback, right? And so that's the challenge is if we're relying on students to be self-starters in that way on top of their educational requirements, you're still back to this gap, this last mile training gap. And so what we're envisioning now is increasingly figuring out how to have a public-private partnership around apprenticeships that enable us to put in place the right incentives for all parties to get recent grads or folks who have not quite finished a degree but need a job to get on-the-job training, real experiential learning at a reduced cost or risk to the employer because they're doing some of the training and putting the support structures around that. And that's something that's table stakes in a lot of European countries, but is entirely novel in the U.S., where we have this belief that market forces will solve this stuff, and market forces tend to solve a lot of problems magically, but they don't solve all. And the reality is this is a problem that has been growing for decades and remains unsolved. And it's requiring a lot of smart people and a lot of time to figure out how to add a new model to solve the skills gap issue and get people into high-paying careers who otherwise might not be.
Yeah. To pull back the curtain a little, I went to Drake University, and they did something similar on a community level to what you're talking about, where they would really encourage internships. And they had a whole program really getting people there, but also so many ties to the community, smaller school in Des Moines, Iowa. And that created a pipeline for big companies like Meredith Corporation or Des Moines Radio Group to have the interns get the experience on the software that they need, all that stuff. And then eventually, when they're looking for new hires, they know exactly what they have. But that's not scalable at a state school where you've got 70,000 people, right? So these are the kinds of problems that people can focus on. So then as an investor, then what are your criteria for evaluating EdTech startups beyond the, as we talked about, it's not going to probably be like a $2 billion, potential market, right? In terms of innovation, market potential, the team, where do you kind of like put most of your focus?
Yeah, look, we focus on a stage. I mean, we found that we can help companies scale much more quickly once they get to 5 or 10 or 15 million in revenue. So we believe that first 5 million or maybe even 10 million it takes years oftentimes to get. And the number one thing that folks need to be able to do, companies need to be able to do is build a set of referenceable customers, other school districts or universities that love the product. And so we've focused on a stage, first and foremost. Secondly, we typically get to know the founder for a year or more before we invest. So we're not simply responding to a pitch deck that comes in saying, "Hey, we're trying to raise a Series A in the next 6 weeks." We want to get to know and track that founder for some period of time, and then we're looking at whether or not they're mission driven. That's important to us. I think building a business is hard enough that if the only reason you're doing it is to try to make money, we do not feel like that is a good, that aligns well with success in the education market. The education market, again, you're probably not going to become a billionaire. And so if you're really doing this to try to make a bunch of money, and that's your sole reason, we have questions whether or not you're going to stick with it through the hard knocks. So there needs to be a mission component for our founders. We find that they make more money if they have a mission component over the ones who are primarily motivated by making a return. And there's a number of other criteria like that. But it's the team, it's the quality of the current customers, and various other things that we look at as criteria.
Yeah. And I guess the kind of a follow-up question to that, how do you assess the impact of EdTech on various stages of education in terms of like the outcome? Are you just looking at the dollars and cents and like maybe thinking the outcome is what leads the revenue, or what do you look at?
Yeah, no, I mean, we love when we find a company that is has a focus on research. And there are a number of EdTech companies out there really tracking in a systematic way their impact. We consider ourselves an impact investor. We care a lot about the UN sustainability goals around education. And we commit to doing third-party research with our companies to measure the impact. So it's definitely part and parcel of our process and our focus. The reality is not every founder has been able to carve out the time to track their impact. So it's not a hard and fast criterion that they must have already done that. But we have to believe from the circumstantial evidence that the product is having a positive impact, and we have a plan to measure that over the course of our investment, and then hopefully publish that in third-party research journals so everybody can learn from it as we move down, whether or not it's positive for our portfolio company.
That's really cool. It's very like inspirational to hear that there are investors out there that really want to invest in companies that are making meaningful change in a category that's ripe for meaningful change.
Yeah, look, I mean, there is EdTech gets a hard knock a lot of the time because we've spent billions of dollars on it, and we seem to have the same issues we've always had with student underperformance. The reality is studying what works in education is extremely hard, just like studying what works in pharmaceuticals is really hard. In fact, it might be even harder because it's really difficult to do a controlled trial in education. No one wants their kid to get to be in the control group, not getting the new stuff, or just the opposite. They very possibly don't want their kid being the guinea pig, so to speak, right? And so it's very hard to do a control trial, but you are talking about the mind, and and how it works. You can't control all the various aspects of all the things that are changing in one school versus another school. You really can't have a controlled environment. It's incredibly complex. And so it takes years to figure out what works. And even when we find a product that does work, there's a massive amount of whether or not it's efficacious in a particular case on whether or not the teacher or administrator actually implemented it in the classroom the way it was studied, right? And if they don't, again, there's certain things that you take, and they say take 2 before bed, and if you take it in the morning, it doesn't work the right way, right? So there are the same things happening with some EdTech products where the whole concept was it was designed to be used in a very specific way. And and you have, unfortunately right now, just tremendous turnover in the teacher ranks, and it's just difficult to get products used in a consistent way in the educational environment.
Yeah, and if we're talking K through 12, there's also the variable of your classmates, what kind of students you get in. Like I live a couple blocks from a grade school. My kid's going to go there. It's rated well, but I'm like, look, he could go into a class with a bunch of really terrible people, and then everyone's learning is impacted, right?
Yeah, and we all know intuitively that parental engagement is one of the biggest factors. And there's a lot of variation in parents' desires to be engaged, and second, parents' ability due to socioeconomic disadvantages or working third shift or whatever it is, to enable all parents to be engaged. So it's an incredibly complex environment, and all we can do is say, we're going to continue to study these things. We're going to move the ball forward steadily. And over time, we're going to identify the things that work. I think in the current science of reading space, there's just significant steps forward in kids learning how to read. And so there are these bright spots. But there's this desire to see us be able to do something incredibly fast. And so far, despite a lot of good effort and a lot of great products out there, we still have a long road ahead of us in order to make sure every kid is getting a quality education.
Yeah. And in terms of moving the ball forward, you mentioned AI earlier for one of your favorite startups. Is there a particular emerging technology, maybe VR, augmented reality, blockchain, AI, anything like that, do you think that you're particularly excited about? And do you think that we're going to accelerate the pace of opportunity with all these, we've got like half a dozen pretty much brand new cutting edge techs that we can now deploy. How much do you think that's going to change the game in the next 10, 20 years?
Well, I think we've been talking about personalization in education now for more than 10 years, but it's never been really possible to provide an individual student true personalization. In the same way that we could imagine video phones 40 years ago, but the tech wasn't there. We've been able to imagine personalization, and we're still able to imagine it, but the tech is finally getting there. And so I do believe that when you can get the right learning object in front of the student at the right moment in time, in the right order, with the right other kind of components, the right reading level, the right type of engagement, and sequence them appropriately, assuming you have enough learning objects created, that you will see student learning accelerate dramatically. And so I think we're still putting in place the building blocks of that personalized future. But I do think, students will learn much more quickly over time in the future based on us understanding where they are, what they've already mastered, and being able to give them the right learning object at the right moment.
Great. All right. Well, to wrap up, I want to ask one final question. This is the funding blueprint. You've shared really great advice around a startup, how a startup founder needs to be engaged with it. And they can't just care about the bottom line. They need to really be passionate about this project. And you'll keep an eye on them to make sure that's the case. Are there any other things that you think a founder should really focus on that will help their chances once they've gotten a little bit later in their journey of getting funded? Any big mistakes they should particularly avoid, or something that just creates a special sauce that you would like to see in your pitches?
Well, I think the thing that the piece of advice I provide founders most often is that they need to get out in front of their customers and do the selling. Many founders are product folks, and they have this grand vision of a product they want to build. And as they sell, they're still trying to build more and more and more of that vision of the product that they want. And I was one of those founders. And the reality is the people who are successful, they get a good enough product, and then they get out in front of the customer and they sell the lights out of that product. And they just keep selling it and developing relationships with customers and hearing what the customer is saying. Instead of just trying to build their vision, they're now letting the customer tell them what they want next. And whilst there's famous quotes from Steve Jobs, my firm belief is that the founders who are successful in the education space are folks who are out selling and not putting too much money into future product development, but building a business with the product that's good enough that they could get out the door, and then coming back after a couple of years and some significant sales growth and building a new version of the product. But too many, I think, are just trying to continually trying to build on to their existing product and putting too much resources into that rather than selling.
Great. So be a good listener and don't be afraid to pivot when you need to, at least in the product side.
Yeah. Customer conversations are the key to understanding where your market's going to be.
Awesome. Well, Troy, this was I thought, great conversation, and people can learn more about Achieve Partners at achievepartners.com. Do you have any blogs or podcasts or anything where you want people to follow you?
Well, my partner publishes something called the Gap Letter. It's an amazing resource, especially on apprenticeships. So you can follow the Gap Letter.
Fantastic. There's also a bunch of really cool resources, different publications and books that are on the Achieve Partners website. So it is a great resource. It's not just like hey, learn about us and work with us. Like, there's actually a lot there. So I encourage anybody in EdTech to go check out the Achieve Partners website. Troy, fantastic conversation. Thank you so much for taking time out of your busy day. I appreciate it.
Thank you. It was good. It was fun talking to Cody.
I hope you enjoyed today's episode. That's pretty much it for us. I do want to give a shout out to our editor, Sean Patel. If you're looking for incredible sound design or audio video production help, get in touch with Sean at seanpatel.com. You can find a link to his website and lots of other resources in the description of today's episode. And today's episode was produced by me, Cody Goff. I will be back next week with another exciting guest to help you understand how to secure funding and unlock startup success. Thanks again for joining me, and see you next week.